The YouTube's got a, there we go. It's being live streamed on the YouTubes. See, this is everything I gotta
share the link.
I know it's everything I gotta do every single time. But we're here now. We're here now. We're on the YouTube. The YouTube is on. I see the chart on the YouTube. Hey everybody. There's no one here yet. But I've got GP in the house, up in the Bags crib.
Yeah.
And Nicholas, as always, chilling at his humble abode. We're on a little bit late today, but we have a live TA report and live with GP at the Bags de la Casa. And JFDI is on Zoom. There we go. You guys share this, why don't you? After I tag you here, let's have a kick-ass show tonight. It's on the stock twats. I'm hitting on the twatters right now. If I can get, I'm failing. I'm failing really badly right now. But I've got the S&P futures up right now, kind of flat, just $2 down right now. So not the worst I've seen on open. Hey, as I was saying, GP's here with me live at my home as we record this. But Nick, since you're on the other side here,
yeah.
I always you tend to be the one that kind of keeps me straight on not being overly bullish or overly bearish. And I hate to team up on you because GP and I have already kind of game planned what we want to talk about a little bit. So I don't want to ambush you at all. But how are you feeling right now? What's in your head as you look at this S&P futures?
I mean, honestly, like, I think it's playing out exactly how I thought it was going to play out. I think that, I mean, I don't want to say I thought that it was going to play out this way, but like, I thought it made sense for some of these energy names to kind of just like fuck around up here at highs. Like, I didn't think that they were going to make it easy by any means. And as I've said before, like, I feel like I am a horrible like commodities type trader, right? I've just kept my position relatively small.
Energy.
Other than that, like, I've been kind of paying attention to gold. I have some GLD in my wife's account. It's a pretty decent position actually. I don't know. What are you getting?
Well, no, I'm just like, curious. Overall? Like, okay, so
like I'm looking at the Qs. I still think they're still within a channel. They haven't broken out of that channel yet,
right?
And on the weekly, they're butting up. Price is butting up against the 30 and the 40-week moving average, but we're also sitting on a trend line that's been holding since 2011, and so I think from just kind of what it looks like to me, like I don't see why we don't bust kind of through this channel higher again. Like, I don't.
So your bias is higher.
Yeah, I do.
All right.
For me to, I think, ultimately change tune, I think that low's got to get taken out. I mean, I'd start to get nervous if like on the spiders.
Yeah.
Like if 373 to like 367 got taken out, I'd start to get nervous. And then obviously, like, if 350 got taken out, I'd be like, all right, you know what? I think this is gonna get a lot even uglier than uglier than it's already been. But
I think that's a pretty good range right there. I wouldn't disagree with that. So
just do me a favor, both of you. take a look at the cues on a monthly candle basis?
On a monthly.
Yes, sir. Would you like me to turn volume on, sir?
No, you don't need to do any of that stuff. Tell me what's happened every single month for the last 4 months.
What has happened every single month?
What's the lows on each
What?
month?
It's basically been flat. I mean, it's
So
basically held it.
most of 2022, especially the first half of 22, we kept breaking prior month's lows. And it would tease with the prior month low, and then we'll come back and eventually break it in that same month, right? So
That's for the past 4 months. Yes, that's
for the
correct.
past 4 months, we have not done that. We've gotten just close enough to that low, and we've reverted higher, right? So we're still in this holding pattern. This is a new regime. Money is no longer free, and there is no V shape, right?
There is no V shape, and money is not free. 1,000%. We are in agreement. Cheers.
So this is what bottoming looks like, right? And I hear you. I hear you that you're still uncertain, which is exactly what's supposed to be happening in a bottoming process, right? But if you're taking a look at individual charts, they're acting wholeheartedly better. We talked about NVIDIA last week, right?
I totally agree.
For a year, we've been rejecting the 21-week moving average. And what do we do with NVIDIA over the last 4 weeks? We tagged the 21-week and we reversed higher. Yes, we're sitting at a
still one of the better looking charts.
Still one of the better looking charts, right?
Absolutely.
And not just NVIDIA, you take a look at Shop, all of these names that have gotten absolutely hammered, right? Same thing, into the 21-week moving average, boom, held higher. So the pullbacks in the base are also getting shallower here. Shallower is a word? I don't even know.
More shallow.
More shallow. There we go. More shallow. They're basically getting bought, right? Because it's shallow. It's coming into a moving average. Before, we weren't holding moving averages. We would literally cut through the moving averages like butter, day to day, week to week, month to month. Not a single one was holding. So to me, this is what bottoming looks like without another catalyst. We've talked about this many times. What's that?
Yeah, I would agree.
Yeah. And like everyone's so
it'd be tough not to.
preconditioned to 2022 that we're going to fail. And so far, 3 weeks into the year, we have done the opposite of what 2022 was. Every point in time where we could have failed, we've gone higher. Are we still stuck sideways? Absolutely. But we've gone higher and we're holding. So this to me is what bottoming looks like, especially a complex macro environment. People are uncertain, and without the macro catalyst, aka another massive recession coming, Fed taking rates to 10% or whatever your thesis is, I don't see it happening at this point. And that's going to be, you got to wait for the catalyst. Otherwise, we've talked about this many times. 37% corrections are not normal. It happens, but it's not normal. And when you have a 37% correction in COVID with free money coming thrown at you, you see a V shape. When you have a 37% money in non-COVID and no free money, you see a very frustrating markets. And I think we go sideways to higher probably over the next couple of years.
Nick, I gotta tell you,
Yes.
and I picked up the microphone for this.
Oh.
GP is much more passionate, and like the goosebumps are on the back of my neck right now. He's so pumped up about this run that he's expecting. It's next level right now.
It's no run. It's about finding. So like we're in the point where we have to either figure out whether we want to start putting money to work or we want to wait for this unicorn 60% more down potential, right? And that's for you to figure out what your risk profile threshold is. Lots of stocks are down 90%.
Yeah.
Right? Like, okay, maybe it will drop another 50%, but
all right.
What's the longer term?
Hang on though. All right. So you know me, Bags, aka Mr. Devil's Advocate here, right? If we are in a bottoming process, which you believe we are, and if Netflix is your market leader, which you have said, we're at the 1 year anniversary on GP of giving us the Netflix chart of death. Remember that, Nick? Tonight is the 1 year anniversary of that. Basically, if you believe Netflix is the market leader, you believe we are in a bottoming process. Shouldn't it be higher from here?
It should be, but that doesn't mean the indices will be, right? Like, so
Yeah.
So in 2021, we saw the Qs and SPYs just rail higher while almost everything was already getting thrashed underneath, right? Look at what Square did. Look at what Pinterest did. Look at what Snap did in July 2021 or October 2021, right? Like these stocks were already 30% down at this point. Yet the Qs were grinding higher because you had Apple and Tesla and whatever, Microsoft keeping us afloat. And now we're sitting in the opposite regime, which is things are starting to look better while the indices are still consolidating their gains.
Yeah.
And for a long time, I've been thinking that you had this pull forward demand, and we had to figure out how long that pull forward demand was for, right? Do we pull forward 5 years, 2 years, 10 years, 1 year, 2 years, whatever it was, right? And so to me, we've pulled forward at this point. What these charts are telling us is 2 years.
But again, if Netflix is our market leader and we a bull market leader, right?
Yeah.
If Netflix is going to show us the way, that chart is stair-stepping in the name of love right there, right?
Yeah.
Like, so what should, and I'm using air quotes. That's bad podcasting. I'm using air quotes. If we are in a bottoming process, shouldn't I just be able to throw a dart at most things and expect it to go higher?
No, because
I don't. Not in a bottoming process like this. No.
Not in a bottoming process where the monetary policy has fundamentally changed. We are not going back to zero
free money.
Free money.
Yeah.
We're going back to free money. Throw darts at everything you want.
Kathy gets all my money again.
Literally, if the Fed, we're going to initially have we're going to get sold, right? If the Fed comes out tomorrow and saying we're cutting rates back to zero
next week.
Yeah. Next week. Yeah. If they come back and say we're going back to rate zero, we're initially going to get sold hard because the first reaction is, holy shit, what's wrong with the economy, right? Like if we have to cut rates back to zero, so it's going to be panic sells. And then after that happens, you should start to see, oh, it's free money again. All these companies that could barely survive before are now going to get an opportunity to prove themselves out.
All right. So
that's the difference here.
Since you two won't fall for my trick question of we can throw darts at anything, what should we be throwing darts at?
So to me, we talk about Netflix,
not financial advice.
Yes, but to me, Netflix is a great example, right? So when Netflix got destroyed in April, it was subscriber growth. But if you saw what their future was, they are the leader in their respective industry, and they have pricing power that no one else does. They got destroyed while becoming profitable.
Fair.
Right? So not destroyed while they're still losing money to gain.
Yeah.
They got destroyed while they're becoming profitable. Tesla is another great example. I know you don't like Elon as much as you might still invest in Tesla, but you don't like Elon.
Sure.
They're getting destroyed while they're getting profitable. So what's the long-term picture on Tesla here?
So Netflix and Tesla, we know GP love.
Yeah. But Tesla can literally go to zero margins and make zero money and still stay afloat for the next 5 years, and they would crush their competition.
Nick, can you answer that question? What darts would you be throwing at? Zach, our good friend Blackouts, says, what about Oxy? All in on Doge, on leverage. I think the Doge is
hyperbole.
The hyperbole, but the Oxy, that's right down your alley, Nick.
I do. I like Oxy. I like Hess.
I still think earnings.
I wasn't expecting a move like this in gold. I don't know. I think you got to keep an eye on GLD. Even like, I don't know. I'd still be long commodity type stuff, I think.
I got to shout out our friend
Deal.
Acres Away on Stock Twits. He's been all over the gold trade.
Yeah,
I
I've been on a
hope I hope
purge.
he's still in it too, because that's been a good one.
XOM is kind of sitting right there at highs. Kind of basic. I mean, it pretty much went 4 weeks tight there, maybe 3, but it's sitting there at highs too. Like it sure looks like. I mean, what happens if these energy names continue to melt up and then just go fucking parabolic?
Wouldn't
I don't know.
wouldn't this move? What is that? Isn't a 266% move parabolic, Nick?
USO is about ready to break higher, break out of a channel.
Pull up the old chart. That one I haven't looked at this weekend.
CL.
Yeah.
I wanted to look at OIH. I'd forgotten to do that. OIH looks pretty good right here. It's
Rig and
pulling-
SLB, right? If you're looking at OIH, Rig and SLB.
Yeah.
So you're giving me Netflix and Tesla. Surprise, surprise, that you love, right? But that's a completely different contrast to the oil and minerals play, or sorry, the energy and minerals play that Nick's talking about.
No, it's also metals, right? Like if you look at XME,
Yeah, minerals.
minerals and metals, are they the same?
God, solars look like crap.
Metals,
though,
okay, metals.
don't they?
Yeah.
So XME is the best. XME is literally looking like FSLR did before it literally tagged 180 from 60 in 6 months.
Yeah.
So XME, if you're looking at the base, it broke out from the base and then retested it, and now it's forming a similar. It's a 10-year base in metals.
Excellent. Yeah. Yeah.
Right. It's a base breakout, retest of the base, held, and now it's starting to push up. Right. It's similar to gold. Like if you look at all these charts,
Yeah.
they look good. I like metals as well. I'm not saying metals won't, but I feel like commodities suck, right? Nick, we talked about this how many times? Trading commodities is terrible. Either you buy and hold and figure out whether it's going to go higher or longer, but
so we don't like the Apples of the world. We don't like the Microsofts of the world. We don't like.
I like Google. I like Google a lot here.
hell of a move on Friday.
So that's Nick, you led me right to where I was going next.
Sure. I mean, it's testing the high end of this channel that it's been in since basically, well, all year. But, and that the 30 and 40 week, again, those 30 and 40 week lines are basically right in line with that trend line. So as price pushes into like basically 100, 102 here, 104, it's really got to bust through that to like, obviously give us conviction, but if put in a higher low.
Yeah. If we're talking about like, moving averages and higher lows and stuff like that, it's like, does the 200 week not matter anymore?
Yeah, it did push through 200 week, didn't it?
Not Google, but the Qs back-to-back closes above the 200 week.
Oh yeah.
Right? That'd
be bullish.
That's it. Isn't that like
8 cents?
no matter?
Dude, a win's a win. Come on now.
Yeah, it's like dollar.
Hey, you want to know something interesting though, GP?
Yeah.
So I on my like desktop, I haven't really been spending a lot of time at my desk, but on my desktop, I have 2 charts now. After you had mentioned the McClellan on kind of other time frames.
Yep.
And the weekly McClellan right now is pushing into overbought territory at basically at 230. The monthly McClellan is pushing into about 150, so it's still like kind of 50 points away from that. The 200 levels is where the 200 levels basically are like extreme reading zone, right?
Yeah.
I haven't like really gone back and kind of like back tested when has like this happened previously, where they kind of lined up like that. But I'm thinking it's going to be, I don't know. I got to get the weekly to kind of whatever puts out. But either way, I just wanted to make mention to you that they're both pushing into overbought readings.
Yeah. And like, you know, we didn't just spend 2022 setting all kinds of history records in the stock market, right? Like
Yeah,
that we can't hit records of the other way as well.
So basically,
Indicators
there's
are-
no analogy in history that
Price is number one.
Yeah.
Price is number one.
And the reality, Friday felt good. It was really nice for the bulls to do what they did. There's a lot of things that close under the resistance. It seemed like more of a gamma squeeze than anything else. Otherwise, you would have seen futures continuation ultimately, right? Wednesday we tagged the CPI from November high, immediately sold off. Thursday we tagged the low. Friday we went up higher. We're in this range of figuring out stuff. So I'm still in the camp that I don't give two shits about the indices. The individual stocks are the ones that are starting to look better.
He doesn't give a shit, he said. Anyway, I want to get back to my question. We got a little off. We changed up when I said Apple, Microsoft, and I was getting ready to say Google, and you hit me with Google, Nick, and I'm so glad you did. Because I think was it last week or the week before that I had mentioned that we've gone through periods of time where, you know, if you consider the FANG stocks, like 2 or 3 was holding, you know, bailing the water, right?
Yeah.
For the rest of the cohort. And I think we could be seeing something like that now. Google, that's a really strong move for Google. I'm not saying that I'm ready to say
Amazon was the week
the same for Apple just yet, but improving, right? Amazon, yes, GP was the week before. If I can find it there. I mean, really strong week, right? Remember, I was like, I'll never get it back in the 85s again. I was crying about it. You know, we've already mentioned the darling of the show, Netflix. Netflix might be months ahead of them, and they might have completely, you know, removed them from the FANG conversation. But I think we're starting to see these mega caps starting to catch a little bit of a bid. That doesn't mean that they're going to outperform the market and be quote unquote market leaders, but I think we can all agree when they catch their footing, it usually the rising tide lifts all boats theory, right? So why can't I throw a dart at any fucking thing full circle?
Because wish.com is never going back to $10, right? Like, so
Yeah.
I don't care what you do. There's just like, you might have these AMC is never, I mean, GME is never going back to what was it, 480, whatever. Like AMC these companies were garbage from the first place, right?
Yes.
It was a technical squeeze that got all the media and the world talking about how, yes, we're the poor taking back our, no, you are not. You're not taking back any power. There was a lot of money driving that. They made tons more money. Wasn't Ryan Sheehan selling out his stock while everyone was like, oh, poor people are going to win and all this stuff? And you're like, yeah, that's the narrative, right?
Let me rephrase my throwing of a dart, and not that every company that gets traded is on the board to be thrown at, but names in the S&P 500.
Not all of them, right? Like, so if you're looking at, I look at 13Fs.
Okay.
And so Google, highest 13F by
this past reporting period.
Yeah.
Yep.
Not the Q4, but Q3.
Yep.
And what's been reported for Q4, which is not all of them. It's only a small portion. Google, highest. Second highest, Shop. Second or third highest, some number like that. What charts are looking better? Google and Shop, right? Like there's only so much money.
I want to glom onto where money's already being attracted, right?
And if multi-billion-dollar hedge funds are putting money, not saying that can't be wrong for 6 months or 10 months or something like that. And if that catalyst comes, they'll be selling down the first thing they can. But so far, everyone's talking about a recession that's going to destroy the world markets, and these guys are buying and adding, right? Those are just straight facts.
That's a fact. We got a
What do you
question.
think of Amazon here? I think
That,
Amazon
that's
looks
where
pretty damn good.
that's where I was going. We have someone
Right.
in chat VT who asked, "What's next for Amazon?"
Like I'm definitely a buyer through 100.
A buyer through 100. So once it crosses into 100, once it gets back into 3 digits, you're a buyer.
They
Yeah.
always mean reversion trades, to be
I think,
honest.
yeah.
On all the mega caps, they're so far removed from any of their moving out. They're so dislocated for strong cash flow balance sheet companies from their moving averages.
Look at that perfect catch there on
Yeah.
Amazon.
What was it? The 8-day, 9-day, 21-day? What was it?
Nine and the 50
Yeah.
combined.
Boom, boom, bam. Right? Like we weren't doing this all of 2020.
No, 2022.
I mean, it's not 2022 anymore. Come on.
Yeah.
That's right.
Why
That's
are we
the whole
talking
point.
like it's still 2022?
I'm not, but everyone else scared little.
Yeah.
Sorry, I won't
For
finish that
sure.
statement.
No, finish it. He's looking at me as he's saying it like
I'm not looking at you. I was waiting
like-
for you to comment.
like I'm scared. I'm not scared.
No, you ain't scared.
I put more money to work last quarter than I had in almost the entire year.
But I don't think you should be putting not financial advice, obviously, but if you're putting money into like Apple, that's safe, right? Like it's not going to die too much. It's not going to go up too much. But if you're looking for opportunities where you can actually grow your wealth, then find the companies that are outperforming and being undervalued.
I sold so many calls and puts over the last 3 weeks that my head is spinning, and it was very profitable.
Yeah.
I'm very happy. I sold puts to get long, right? They didn't happen. So I took that capital. I sold covered calls on a lot of positions I had. None of those got, called away. So it was a very, very, very good 3 weeks for the bags camp.
That's awesome. And that's the way to do it, right?
But at the same time, right, like when I'm selling puts, I have to have the capital there to back it up in case I have to buy those shares. Same thing on the other end. I had to buy more shares of the companies that I was able to get to at a nice level to be able to sell those calls.
Yeah.
So that's why I put a lot of money to work. And each time that I don't have to get called away, that lowers my cost basis, right?
Yeah.
Each time it just keeps lowering my cost basis. So I had enough time over the last 3 weeks to sort of dig into that and had a really successful run at it. But at the same time, that is putting money to work in regards to having to have enough shares to be able to do that in the positions. But no, I was asking over at Charge for Charity what I'm doing right now. I'm not buying the S&P at this level, right? Like we've talked about this a bajillion times in the last 52, 54 weeks of doing this podcast is don't buy the verge of the breakout, buy the breakout or buy the retest of the breakout. And we haven't broken out if we look at the S&P. We haven't broken out if we look at the Qs. So
the Qs were the only green week for the candle, right? Dow Jones was actually the biggest loser because but they were actually the biggest loser on the week.
Yep.
Which was the ones who were leading us out.
Yep.
So it does seem like mean reversion at this point.
Yep.
The Qs are mean reverting back to their historical moving averages, whereas the SPYs and the Dow Jones are resting. So money's rotating.
As far as what we expect for Amazon, I think that was the original question. I mean, I don't know. I'm kind of with Nick. It looks better over 100 than it does here to me. But I was selling puts at 85, just hoping I would get
which
those.
is a great place. It was.
I was hoping
many confluences.
I was hoping I'd get those. So I may never get those again, but who knows? We'll see. What I expect to happen from Amazon, I think the layoffs they've done is a drop in the bucket as far as what's going to really move them. But every time we see a company laying off over the last month and a half, 2 months,
it's been good news.
It's been good news. It sucks for the people, but comes back to something that I had mentioned on one of the previous Twitter spaces that I did, is we got to get back to a point of not being in the upside down where bad news is good news and good news is bad news. At the end of the day, for a company and their stock price, unfortunately, that is good news for them, right? And the stock behaved as it should. Now we'll see what happens as we come into, I think 25% of the market reports this week, something like that. And we've got the Fed next week with another earnings trough of companies reporting. I'm still in that wait and see moment, but again, I've got enough money to be able to do something with. I don't know that Amazon is the first one on my list that if it breaks above 100 that I want to throw a bunch of dough at, just to
But
be.
So I think you should think about it, because it's not financial advice, but
We're in person,
so
it's totally not. It's casual friends talking.
If you take a look at the monthly charts, right, this is where I would start. So if you're looking at these beaten down names, and where are the monthly charts sitting? So for 6 months straight, Amazon has broken the prior month's lows. Is that correct? 6 months or 5 months, right?
Hasn't so far this month.
And it's already taking out. We've already taken out prior month's highs, right? We haven't closed above it, but we've already peaked above it, right? Is that
97.23, 97.24? We're above it by a penny. So yes, you can say we're above it.
But that's a distinctly different look on the candle, right? So we can go higher. Obviously, I think we're in mean reversion on a lot of these mega caps.
We still have 7 trading days.
Yes, next Tuesday is the month. 6
trading days. Monday, Tuesday, Wednesday, Thursday, Friday, Monday. Right, 6 trading days.
Tuesday is 31st.
Tuesday, yeah, 7. That was right.
Yeah, that's what I was
great. First time. Yeah.
So I think these are let's pull up the Google monthly candle. What does that look like? I haven't looked up these monthlies yet, but so I'd be looking at these. Netflix monthly already taken it out. Tesla monthly, has it taken it out?
I had to tell Zach bye-bye. He's got to leave.
No. So Tesla's going to be a while before it takes up the monthly candle. But Netflix already has Apple. So I'd be starting here, right, to find the strong, Shop. We're talking about Shop, right? Has that taken out the monthly highs?
Nope, not yet.
Not yet. So these are the ones I'd be looking at in terms of if you're looking for trades to get long.
Took out the monthly high back in November, though.
Yeah, so that's already changed. And what's it doing now? It's hot dogging.
It's basing.
It's hot dogging as a common king.
Yeah. Shout out to CK. Where's CK been?
He gave up. Because it's just sideways, right?
All right, Nick, be that other voice. Either tell me that I'm right or tell me that I'm wrong. That Netflix is, or sorry, Amazon's someplace that you want to fish with some weight at in.
I mean, I like it for a swing trade. I mean, for the most part, I think it pushes.
The 50 month.
Yeah, kind of up into basically the one.
I liked it to Chicago, but I don't think it's going to LA.
No, but the one exactly, right? We're past that point, right? So I like it to the 50 month, which is the mean reversion I'd be looking for, or slightly underneath, which is between 130, 125 and 135. I can't remember the exact numbers, but
yeah, I don't want to speculate. I think it runs into some problems in the 1-teens.
Yeah, I could see that as well.
I think that's fair.
Dude, there's so many dead bodies in it.
Oh my god! Yes.
You could literally pull out any level.
I mean, there's the volume profile, right? Once you get to 119, 113 to 119's a battle zone.
Yeah.
So this is what everyone sees the recession conversation, right? So what I wanted to ask both of you guys is, my view has been that we're going to go back and test and base the COVID lows, right? I mean, sorry, the COVID breakout, not the lows.
Yeah.
For quite some time. And that's kind of what's happening. And we didn't base during COVID. We just went straight willy-nilly straight to the moon. And we're now coming back and putting in reversal kind of looking patterns at this base breakout from
I've got a better
2020.
chart of that. I notated that some time ago. Hold, please.
All right, so we had the while you're looking that up, back the Qs, for example, broke out in June 2020 at above 255. Right, we came back, we retested it within a couple of days. There was no gap to fill; it was already filled at that time. But we broke out, and we didn't create any base there. After we went from, what was it, the human population potentially being wiped off the planet, to the market going
free money.
Yeah, and the market going bananas, and we didn't absorb any of that, base any of that.
Get a PPP loan, never pay it back.
So my base case is that we've pulled forward demand of all those plenties of years, and it's going to take time to grow into those consolidations, right? And we are here now, back testing that breakout. And if we fail that back test, there's a different conversation. But as of now, we're just back testing that. What do you guys think, if that's what's happening here, or there's something larger going on? If you're looking more long term, and Nick, this might be not in your wheelhouse.
Nick,
Yeah, oh,
I mean, I'm happy to jump in.
yeah, go for it.
Going back to my waiting for good news to become good news and bad news to become bad news, I think we're starting to see that cycle happen.
Yeah.
I do think the Fed has been known to be late to the party, right? And kill the patient, right? You're acting too late and too strong.
And then hit him with the paddles later.
I think it was almost a year ago, I was yelling, raise the fucking rates, like last month.
Yeah.
I want to hear what he says in February, on February 1st. And that will help me think one way or the other even more, because remember, he almost did a 180 back in the summer. It was all the way up until May, where Jay Powell was saying everything's status quo, we're not changing anything. And then in that fall meeting after their summer break, it was
just that Jackson Hole.
Hell is coming, and I'm bringing all this rate changes with me. So if they get a little more dovish, and I'm not saying I'm less hawkish. If they are less hawkish on February 1st, I can see that as a major catalyst, and I can see that maybe the recession stories getting broken
Or delayed.
Or delayed. It begets that miserable bear thesis that I've had in the past, right? Where the bears, you're a bull, but you want to buy lower, and lower never comes, and then everything's going to zero. I think that talk happens around the bears with this recession, right? We're still full employment, right? There's a lot of people being laid off. Private sector jobs have been through the roof because more people this is something we were just talking about a few minutes ago, more people are working for themselves and not working at corporate jobs as much. I think that the labor market isn't as bad as all the layoffs appear to be currently. And if they're signaling that we aren't going to raise rates as aggressively, and just lay out the playbook. That's all I've said the whole time with what the FOMC does, is just lay out the playbook. The market will go along with that, and I think we'll be fine. But that's presuming a lot happens on February 1st. If they're still hell-bent on 75 or 50.
Aren't they already down to a quarter?
Well, I'm just saying, if they're hell-bent on 75 or 50, I don't think that the recession fears get tamped down at all.
Oh, if they come out with 75 basis points again, that's your catalyst. Get
Yeah,
short.
you're fucked.
We're
Yeah.
going down, right? Like
I think 50s, even with 50, right? Like if anything more than 25 is an oh shit moment. Is that is not less hawkish.
I think 50 to 25 is okay. 75, that's definitely get like max short. To me, it would be get max short, literally just throw a dart.
50 is the base
Yeah.
scenario, right? 50 is what everyone should be expecting. I think 50 is probably still doing too much because I think we're late. I think recession has already peaked. I think inflation's already peaked. I don't think the job market's as bad. The more pain that you inflict on the consumer and the economy, the worse it's going to be, right?
And we're already at 4.25, right? Is that the rate right now?
I think so.
So they keep telling us that they want to get to 5%, right?
Yes.
I don't know.
But it's how they get there, right?
Yeah, and a lot of this was initial shock from how they. Sorry, Nick, I didn't even let you answer. I'd rather hear from
4.5.
No, I love listening to this.
4.5.
Keep going.
So to me, it's I don't even know where I was on the thought process, but yes, the markets can't go higher because rates are higher for longer. Thesis doesn't make sense to me. The last year was about the initial shock of going from 0 to 4.5, 5%, right? That's what we had just absorbed, and that absorption cost most companies 80 to 90% of their values. Yet you think there's another 50% coming. Fine, that's a possibility. I don't think it comes without another catalyst. I will be happy to change my views if another catalyst, if the Fed is dumb as shit and comes out with a 75 basis point. I'm telling you right now, I will be max short because that's going to destroy anything and everything.
Yeah, and from here we're talking just down to that gap, or not down to the gap, down to the breakout. We're talking another 20% down. And if you read the bear porn that gets posted every day, like they're expecting anywhere from 25 to 50% further downside.
Yeah.
Is it possible?
On what on the indexes?
Yeah. Is it possible? Anything's possible. Is it likely? I don't know. I think
50%.
I think the fine line that this rate discussion and how Fed funds works with everything, I think that's really going to determine, do we get there? I mean, I'm not saying we get down 50%.
I'm sorry, we're not going to 200.
No, I don't think so either.
Well,
But keep in mind, rates aren't going back to zero
No.
for a really long time, is my view, right? Rates will stay above a certain zero was just nuts, right? We'll say at, let's say, between 2 or if rates go back to zero, we are screwed as well. That means something is falling and breaking really badly.
All the market needs is a clear direction, right? The market will figure it out.
Yeah.
It can't be this change, that 180 on a dime. That scares everyone and everything.
That's what they did, right?
Exactly.
They literally said,
well, I was bitching
it's
about that in May.
transitory.
Yeah.
No, we're just kidding.
No, we're joking. We're fucked.
We're gonna raise it 200 basis points.
Hell, what's coming with it? That was September. It was Jackson Hole, something like that.
They're gonna punch you in the throat and then kick you in the nuts and then gas
But
your ass.
that's all I'm saying is the Fed needs to just be less hawkish. They can still be hawkish. They can still say rates are going higher. That's fine. Here's the schedule in which to do so. But at the rate at which they keep jacking things up, I think is the more critical piece. If it's another 50 or 75 basis points, like, where do you fucking stop? The corpse, it's already a corpse. You just beating it on the chest to hope it comes back to life. No, you've killed it. Anyway.
Like where I'm also struggling is like, so the conversation has been everything's gotten destroyed. Now the generals get destroyed and then we bottom. Shit, generals got destroyed. Tesla lost over 50% in 6 weeks, right? It went from 469% or 75% from its highs. That's not destruction.
I mean, if this isn't flashing risk on, I don't know what the fuck is. You know, we haven't talked crypto at all, and I think this is the perfect way into it.
I was gonna say that Ethereum chart looked really good. I was looking at that.
Look at that. It's back above the 200 weekly. I mean, it's butting up against the 50 weekly. I mean,
we talked about this in
yeah,
November.
Yeah.
If FTX couldn't break this,
yeah.
What do you think was? Like literally you needed Binance to go bankrupt.
You look at, well, and that still could happen.
And that happens. It's a different conversation.
And I'm not saying Binance is going bankrupt. Binance has more money than God right now. Which might be problematic. That's another conversation for another day. We don't have time for that tonight. But yeah, the crypto charts look pretty good. I hear, you know, people saying, well, this is the whale's chances to get out, right? It's the distribution, blah, blah, blah. But in the cycles that we've seen in the past, crypto has been the leading risk on indicator, right? And I mean, you don't go, what are we up? 38% in 4 weeks, just on a whim. I mean, we did it back in July, but anyway.
Yeah, these charts, we've been literally talking about Ethereum and Bitcoin since like end of October, beginning of November.
I mean,
right?
Bitcoin's 43% in 3 weeks.
It's like, then you look at junk bonds, and you look at high yield growth bonds, you look at bonds in general.
Let's jump J and K.
Right, like that's a small pullback in a fairly large pattern right here. That's bullish. That's been bullish for a couple months.
Hey Nick, one thing, and I kind of got sidetracked off of our original start of the show here because I was just so happy I've got GP in his bikini here beside me.
That's right.
How far do you look into candle patterns? And I bring that up because when I look at the weekly on the SPY, like that's a hanging man doji or a hanging man candle, not doji, it's a hanging man candle. Patterns in the past, we've talked about chart patterns, not candlestick patterns. Basically we're just ways to fuck you in 2022. I don't know. I'm curious on your two's take. Oh, I know GP. So GP, you don't answer this. This is for Nick.
It's not a hanging man, but
it's not.
I don't think so.
Tell me why it's not.
Because it didn't close at the highs, right?
Does it have to close at the high?
Yeah, like it
doesn't need to come after like a sustained move.
Yeah,
I feel like.
Yeah, it's like we've now gone straight up like 30%, and then you see the hanging man. It's the action behind it, not just. I think that's what a lot of people get like. So I've gone off on tangents. Oh, it's a double top. No, it's in a downtrend. It just got sold, right? It's not a double top. Hanging man's it might be short term, but it's not indication of a long term.
No, right? I'm not saying this falls off the table and goes 50% down from here. Yeah. That's not what I'm saying. But to me, it does. The way Friday was right. That was the entirety of the move for the week.
Go back to the week, right? So like this is a great example, right? If you're looking at the August candle here, right? That's we went from 340 to 420-ish, right? On the in what, 6 weeks, 7 weeks?
3, 6, 9 weeks, yeah.
In 9 weeks, we had a 20% move in the SPYs in the middle of disaster macroeconomic news. That candle is an inverted hammer. Why? Because it's coming in a sustained move. A hanging man in a 2 week up and down, like 6 weeks sideways, is not a hanging man. It's the action preceding before. That's my view on things.
So it needed to be if it were here, that would be a different
Yeah.
story than it being here. Got it. Okay. Yeah.
Yeah, I would agree with that. I do have, what is it, Steve Neeson? I do have his Japanese candlestick charting book in my library. I'd say I pay more attention to candle analysis in two different, I guess, kind of scenarios. When I'm looking at
I
monthly,
know
like my
the
monthly
Hackney
charts are in candles. And then if I was like day trading or just short-term swing trading, I would be paying attention to the daily candles as well. But for the most part, I don't putz too much anymore with individual candle patterns. If it would catch my eye in terms of just looking at a chart, like things that would stick out, like an igniting bars, big like engulfing bars. Those are the kind of like reversals that I want to see. Like if I'm looking to, piece out of something, if I got like a huge daily engulfer, I'd use that as a signal to kind of reduce my size a little bit. And on the flip side, like I'd use it as like a long entry too, and as like a way of kind of like defining risk. I don't know. In terms of candles, though, yeah, it's just things got to like stick out to me. If it doesn't stick out to me, then it's like.
And what's
I
the
don't know.
motion of the ocean, right,
Fair
Nick?
enough.
So
Yeah, right.
what is the last 5 candles or the 4 candles done before? Let's call this the hanging man, right? We have wicked off lowers, right, all the way up. So to me, this is a kind of within a bottoming process. This is a wick off a lower moving average. It basically got caught up, but not enough to clear last week's high. So people are still digesting information.
Right, like looking at it.
Yeah.
Like what I would say is that price pushed into that descending trend line, and then on that candle, it basically sold off. People were selling into it, but it's almost a bullish candle because it closed well off the lows.
Yeah.
I mean, not like crazy bullish, but it's kind of bullish.
Can you get rid of the wicks on this chart in your appearance?
The wicks.
Yeah. Can you just show the bodies? Like I know that you can do that on Thinkorswim, so I'm just curious.
You could just go to a line chart almost.
Yeah. No, it doesn't help me. That visualizes nothing for me.
Oh, sure.
But in like Thinkorswim, like whenever I'm like thinking about like patterns and candles and stuff like that, I always go to my options appearance settings and remove the wick. So it only charts the body essentially, right? So the highs and lows. So what does that look like to you, right? And that's what I'd be looking at. So I posted charts here and there without the wick to kind of see what's happening. So if you're looking at this, if you took out the wicks, it's essentially an inside candle.
Yeah, absolutely.
There we go. Boom. Yeah.
It's
so that's an inside candle, right?
sideways action. Yeah,
that looks really different than
with the wick.
With the wick. And so like if you're looking at this pattern, it can be inside and break down, but it can go any way. It's not a hanging man, but what's happening here to me is it's consolidation.
I learned something today and I'm better for it. I can remove the wicks.
So I think this helps you visualize sometimes, right? Because all this stuff is human psychology visualized.
Yeah, absolutely.
And without the wicks, you get to see where closing and opening prices are, right? So if you see, if we're looking at this chart that you're showing here, you see the inside candle here in May, and then the push is high, but then you see the inside candle after moving straight 15% in 4 weeks. That's probably a caution signal, right? We couldn't break higher.
The pattern says down. The pattern says down. We had an inside and we had an inside and we went up on both of those. So 50-50, flip a coin. We're going down this week.
We're going higher.
I think we're going higher. We put in a higher low. I mean, we came off that trend line and put in a higher low right there.
I'm being facetious.
Yeah, I know. He's trying to push my buttons.
Being facetious.
No, I think we're ultimately going higher unless another catalyst comes in, right? These are how bottoms are formed unless there's more bad news.
Well, again, I think there's still a lot of mixed signals. I think there's a huge amount of earnings over the next 2 weeks, and we have the FOMC. So there's a lot of reasons why this could get sold off, or that could go straight to the moon.
Good. But what are the underneath stocks telling you? And the underneath stocks are telling you that there's buyers stepping in lots of names across the board.
Yeah. Okay, we got a couple minutes to go. I don't want to hear your Oxy, your Schlumberger, your Hess, Nick, but give me 2 names that you like as an intermediate trade. Because I gotta say, I was pretty good last week by giving out Square and Coin and Spotify again. I gotta say, my 3 last week were.
What did I say? Amazon, NVDA, and Netflix.
Yes, and yeah, it was your 3. Yeah, that's right.
So is it
2 out of 3? 2 out of 3 ain't bad.
Can I go back to VRTX?
VRT. Oh, Nick, you're killing me.
All right.
VRTX.
How about
That's your baby?
Yeah, I mean, I'm really stalking. I don't like how the solars are behaving whatsoever, but I keep kind of stalking ARRY. I just, for some reason,
That's
like
your
that
baby
chart.
too, huh?
I don't have a position in it,
investor,
but
right?
I'm looking to, yeah.
Yeah, you're trading. You're swinging
You're a
it.
trader.
You're swinging it.
That was not a great candle for solar, Enphase, but there wasn't a crazy amount of volume on First Solar.
Euro Japan.
Enphase
Euro
wasn't either.
JPY.
No, that's crap. It looks like it's all breaking down.
We didn't talk about China at all.
I did a little bit in the chat.
But Baba and Baidu look great.
I kind of think maybe that's our leaders with Netflix.
Yeah.
I give if the market continues to do what Netflix has done, which over the last year I have no disagree with GP. I think
Dude,
Netflix and China are the leaders on what price actions they'll do.
And I think that's the thing here, right? Netflix has now proven that their earnings model works.
Yeah.
So you have until next earnings to probably wait out going short, is my opinion, right? You can find individual names, but Netflix is probably going to guide you for the next 3 months on where price is going. And let's see where it's at on April earnings. If they collaborate during April earnings, maybe we have a change in catalyst and the market's turn or whatever. But
So Nick, Vertex and Array.
Yeah.
While we're on the subject of some biotechs, I kind of like the look of XBI too. It's finally potentially releasing some there.
Yeah.
We'll see. I would love to get it a little bit cheaper, but I think it looks pretty good. 2 or 3?
2 or 3. Roku.
Ooh, going straight to the garbage bin.
Oh, but it just looks great.
Yeah, it does.
I'm sorry. Etsy.
All right.
Yeah.
That looks pretty good too.
That's 3 weeks tight.
Yeah,
that's a hot dog. That's a lot.
That was a monthly.
And yeah. Okay, 3 months tight, even better, right? That's even stronger.
That does look pretty good.
Etsy looks great. Amazon reports soon. Ancillary play. Into
Is Amazon this week?
February 2nd.
Next week.
Yeah. So I like Roku. I like what did I just say?
Etsy.
You know what looks really impressive?
Tell me.
Upstart.
Really?
Yeah.
That doesn't look bad.
Look at the line that it's been rejecting for the better part of 14 months, right? That moving average, that purple moving average you have here.
Doesn't look bad.
It just looks really good to me.
Doesn't look bad.
I mean,
This is for
through
trade. They're like,
18,
it's a garbage bin. This is a garbage bin trade. Maybe it turns into more, but
I
right
thought
now,
Roku was your garbage bin trade.
no, I actually like Roku because they're actually a real business. And the fourth bonus is Redfin.
Redfin. Oh, he's
What?
going for Orfer.
And I don't even like the CEO.
Redfin.
damn. All right.
Well, we're seeing a lot of charts with this similar setup, though.
Yeah, but the best part about go to the daily.
All right.
and
Well, if
put on the
that,
volume. This breakout is on the highest volume ever.
what about Riot and Mara?
Those all look great too, but those look like part of the Bitcoin short
Yeah,
squeeze,
yeah.
right?
Yeah.
So it's all dependent on where crypto's going. So
So
if those, what I've also noticed is those die first and they rise first before crypto does. Like coin has been rising,
Yeah,
and
what was cool.
MicroStrategy has been rising for weeks now. And Bitcoin is just starting to catch his legs.
all right.
Hood is looking decent.
I mean, I feel
Hut
I-
has just doubled.
I give snow last week too. I think I can't rely on what I've said's working. But I like Disney this week.
Gosh,
I mean, after that big move, I still like it for some continuation.
just a painful stock over the last
It
decade.
is, no doubt, it is.
What
But
happened to Goldman over the last week?
I like some continuation there.
They had to weaken the financials somehow. Goldman's usually the easy way to do it.
I
Sure.
also like
Hardly.
Palo Alto for some continuation.
Ooh.
Uh,
Look at service now. I know you finish your three.
We'll
but-
look at service now. That looks pretty good too.
Yeah.
yeah, that does look good.
I say I know you don't like Palo Alto, Nick. I could hear it in your ooh ooh ooh. I think if all of tech's going high, cybersecurity's got to go with it, and not just
Yeah, I agree. I would agree with that.
cybersecurity. But it's got to go higher with it. And what other chart did I look at that I really like? Oh, I like a short on anything that is healthcare related.
What about defensives or staples?
UNH, don't like it.
Yep.
Wouldn't touch it. J&J, don't like it. Wouldn't touch it. I like shorts on anything big pharma and healthcare.
Take a look at LMT.
LMT.
Lockheed Martin.
This is not financial advice.
Yes.
These are on trades if we take them.
This is.
But you don't like big pharma?
I do not.
So like
big.
like IBB you don't like.
No, I think you're talking about healthcare services, right? Like J&J and UNH, but not necessarily Regeneron or
No, not
Gilead
Regeneron.
or
Okay.
I don't like
I
Lilly.
gotcha.
I don't like
Yeah, they all look toppy, I suppose.
I
Yeah.
don't like Gilead.
okay, failing at a prior breakout
Yeah, no,
after 13
I-
years of doing jack and
Yeah,
shit.
yeah, I don't like it.
That's fair. Regeneron looks weak too.
Take your pick.
Regeneron's a
It's
hard
a
name
better
to
chart
trade.
than all the others, but it doesn't look great.
It's the distribution pattern, right?
Doesn't
This is what I see in Oxy. This is distribution pattern. Maybe my eyes are deceiving me, and you guys are all right about Oxy, but I see distribution all day.
And I'll give you Target. I like Target.
I like shopping there.
I like Target. Mrs. Bag spends a lot of money there. This kind of reminds me of the pattern that Moderna has been going through a little bit. So I like Target. Maybe not as much the upside as the others, but I like it. So there you go. We've gone another hour, gentlemen. GP, it has been a pleasure to have you in my home.
Thank you for having me.
It's been a pleasure. Hey guys, we've been doing this for 55 weeks now. We've taken a couple off here and there, but we started this at the beginning of January of 2022. We're at the anniversary of GP saying Netflix was going to lead us to hell. We're also at the anniversary of Nick championing Lamb Research, and it's only down. And it's only down 22% on the year over year.
Nick, do you remember that conversation with Lamb Research?
Yeah, totally.
It was one
Totally.
of our first conversations because we were just getting to know each other. Having never met in person, but chatting on the stock twits. It was hilarious because I'm like, why won't a strong stock break a pivot? Well,
Sure.
now we know why.
Anyway,
It's
Nick,
amazing.
I haven't given you any strong shit since I need to buy me some gush. So I had to throw Lamb Research out this way. She actually reminded me. We miss you. We wish you could be here. We've had a great time. But hey, let's keep doing this for another 55 weeks.
I'm in.
All right, my brother.
I am in.
Everybody who's watching now or watches on demand, thank you. We appreciate it. Everybody who chimed in the chat. Randy, great to see you. Haven't seen you around in a bit, so appreciate you. With that,